What is going on, you guys? Welcome to the video. Today we're going to be looking at 3 stocks to buy going into the month of September. Now I just want to take a quick second and say thank you to everyone that has been supporting the channel. Guys, we just recently passed 3,000 subscribers. So I just wanted to say a quick thank you to all of you guys for all the ongoing support. For anyone that's new to the channel, guys, I am a long-term investor. I'm not concerned with what happens over the next month, over the next 3 months, over the next 6 months, even up to a year. I mean, my goal as a long-term investor is to identify companies that I can buy today that 20 years from now will have grown and appreciated in value. And ideally, I'll be pulling in some dividends along the way. And even if we were to see a broader market correction or a market crash over the next little while, guys, that doesn't worry me at all, right? I'd likely take that as an opportunity to go in and pick up some additional shares of these solid companies while they're trading at a discount. So let's get into the first stock for today's video. This is definitely not my typical style of stock. This is definitely more on the riskier, speculative side. It's the company DocuSign, ticker DOCU. And you may have encountered this company if you've done any online paperwork recently. What these guys do at the core of their business is electronic signatures. And this is becoming very, very popular in industries like the real estate industry, industries that are very document heavy. I know that, back in January, guys, I signed up with Questrade, right? The online investment broker. Everything that I did was done digitally. All the paperwork, I mean, I didn't have to sign a single piece of physical paper. And if you guys can think to any documents that you have signed recently online, very good chance that that little signature, that little initial there was credit to DocuSign. This company was incepted back in 2003. They don't only do digital signatures, but they're also involved with speeding up the process for online agreements. They're dipping into the payment processing space. But the company IPO'd in late April of this year, so a brand new stock to the market. Having a look at their share price here, guys, we saw a pretty substantial run up following the IPO, and this can be very, very typical of a nice new hot tech issue everyone's excited for. In the following months, we did see a bit of a cool off in late June, and now hopefully we're starting to see a little bit of some stabilization within the share price. Now, why do I think that DocuSign is a good stock to buy? Before we even dive into the numbers, I mean, let's just talk about the stock. Let's just talk about this space in general. 10 years ago, something like this didn't really exist, right? The need to sign documents digitally, that wasn't really a thing. And what DocuSign has done is essentially created or invented this little niche for itself, this own little industry. And in my opinion, businesses all over the world can and will benefit from a service like this, especially as we see these companies transitioning to a paperless, cloud-based model. We're seeing more and more places legalize and regulate the use of these digital signatures. So as confidence grows and more companies begin to adapt, this process, this feature, I think that it's going to become the norm, and I think that there's a pretty big opportunity for this company going forward. Having a look here at their most recent quarter, their first quarter as a public company, they added 30,000 new customers, bringing them to over 400,000 paying customers total. Clearly a bit of a demand for this service. They reported revenues of $155 million, which is a year-over-year growth of 37%. One of the metrics that I think is a positive with a company of this sorts is their margins, right? High margins, right in that 60 to 70% range. This is a company that caters not only to the big blue chip, large enterprises. They also offer their services to medium-sized businesses, mom and pop stores, so even for these smaller companies, it's just a matter of visiting their website, choosing a pricing plan. They're not limiting themselves to the big blue chips, quote unquote. They have a very vast spectrum of potential clients. Now, like I said, this is a stock that I would absolutely classify as a higher risk stock. As with many new companies, we don't have any real financial information to base our decisions off of. This is a company that's not yet profitable, and they do face competition from big companies like Adobe. That being said, I do see pretty strong potential here just with the services that they offer, kind of the way that I see business being done in the future. If they play their cards right, I think it's definitely one that we at a minimum want to throw on our watch list. The stock is currently trading for about $58 USD. Of course, does not pay a dividend, but DocuSign is the first stock to buy in September. Moving on to the second stock for this video, and this stock is much more my style of stock, much more of my bread and butter, or should I say, my Big Mac and fries. It's the company McDonald's, ticker MCD. And I don't have a whole lot to say about the company McDonald's, guys. I've been holding this stock since I was like 16 or 17 years old, and I intend to hold this stock for the foreseeable future. This is the largest fast food chain in the world by revenue. They have over 37,000 locations worldwide, a good chunk of those over in Asia, right in the high growth markets. Just a beloved company. I mean, Americans on average consume about 3 Big Macs per day with a Diet Coke, and they're the proud sponsor of type 2 diabetes. Okay, bad joke. But the stock trades for around $161 USD, trades at a PE of about 20, which is right in line with the industry average. And by investing in this stock, you're pulling in a nice 2.5% dividend yield. Now, what I really like about McDonald's, guys, is the company's adaptability, right? Over the years, we've seen them implementing things like all-day breakfast. That's worked out really well. Of course, we have their new mobile ordering, mobile pickups. If you guys have been into McDonald's anytime recently, you of course know they've totally revolutionized their in-store experience, updated the technology, really trying to utilize that to the best of their ability. But the one thing that sticks out to me with McDonald's, and I'll share with you guys a quick personal story. About 3 weeks ago now, I was over in Calgary with a bunch of friends. We had an Airbnb, and all weekend long we were using, Skip the Dishes, DoorDash, Uber Eats, and it was the first time that I had ever experienced McDelivery. So McDonald's has recently teamed up with Uber Eats, kind of rebranded an aspect of their business to completely adapt to this trend of on-demand food delivery. And if you guys ask me, where do I see our society going 5 to 10 years from now? Guys, I think that food delivery is going to be a huge part of our lives. And let's be honest, as a generation, in particular us millennials, us growing millennials, we're a lazy generation, and I think that food delivery is going to be really huge. I live in an apartment, and I kid you not, it feels like every month I'm seeing more and more of these skip the dishes people rolling up and delivering food, to my apartment. So I can't even imagine how things are going to be, 10 years from now or in the future, but I do have the confidence that McDonald's will position themselves well to be a big part of that. It's just another example of how, again, McDonald's is just noticing a trend in our society, adapting, and then jumping headfirst to take advantage of it. And for that primary reason, guys, along with McDonald's just being an overall quality company, I mean, this is a company that's raised its dividend for 41 consecutive years. I think that this is a great stock to hold as a staple, especially where we stand in today's market, getting towards the end of a cycle. Don't just chase the tech stocks, guys. Companies like this are perfect for core positions in your portfolio. So McDonald's is the second stock to buy in September. Moving on to the final stock for this video, we're going to be shifting over to the Chinese market. This has definitely been a bit of an interesting space over the course of 2018. Looking at a chart here of the MSCI Chinese Index, which is basically a representation of the broader Chinese market. We've seen an outstanding run through 2017. We can think back, there was a lot of excitement surrounding these Chinese companies, and then a pretty substantial sell-off or a cool-off period, which I think was very necessary, pretty much starting since the beginning of this year, right? So 2018, we're seeing a lot of these major Chinese companies down 20, 25%. And these are big companies. And although some investors are running for the hills, I'm absolutely inviting this and looking to potentially buy into some of this weakness. The company that we're going to be looking at today is my personal favorite of the major Chinese stocks. It's the company Tencent Holdings, ticker TCEHY. And in this video, I'm not going to be doing, like an in-depth overview of the company, because I have talked about this company in a couple of my previous videos. If you're not familiar with the company Tencent, I'd highly recommend you go check out some of my previous videos. I'll link them for you guys in the description below. But this company is an absolute behemoth, man. This is a powerhouse company, a very large company. So to see it down 25%, that definitely piques my interest. Tencent is a company that often gets the comparison to the Facebook of China, likely because they own some of the larger, or I should say the main social network or platforms over in China. Weixin or WeChat is their messaging, their social platform, over 1 billion monthly active users, just a huge audience to monetize. As well, guys, This is just a massive player in the video game space, which is a field that I like. Owning companies like Riot Games, League of Legends, I mean, long list. And like I said, guys, just go check out my other video for a full breakdown. Because today I wanted to talk primarily about the weakness that we've been seeing in the Chinese markets, in particular with Tencent, and whether this should be, a cause for concern, or if we should be taking this as an opportunity to maybe start, chipping away at a stock like this with it down so heavily. So I guess we'll start with the first point. Of course, guys, we have the trade wars, this tariffs, all this drama going on. Luckily enough for the company, I believe that Tencent isn't too heavily affected by this. This is a company that a lot of their business primarily is done within China. So you will have this overhanging concern, and it's reasonable to see some pessimism. And to be completely honest with you guys, this trade war stuff definitely has escalated more than I would have expected. Thinking back to the original talks. But it is what it is, and hopefully 10 years from now we can look back and say, this didn't have too much of an impact on this particular company. As well, guys, we'll bring back up this chart here, and just after such a strong 2017, such strong performance over the past couple of years, when you do have this first sign of concern, whether that's the trade tariffs, whatever the case may be, it's very common that we'd see investors start to take some profits, right? Whether that's institutional, retail investors, just locking in some of those big gains that they've been making over the past couple of years. So that's nothing that worries me. That to me is just natural, and that's part of investing, especially with treasury yields starting to kind of creep back up here. Maybe some investors are thinking like, what, let's just be safe. Let's just park our money over here, get some kind of risk-free returns. That's a possibility. Tencent did report their earnings last week, somewhat of a subpar earnings report, which some investors were not pleased about. They reported net income slightly down 2%, and this was the first time in almost 13 years that they've seen their profits decline. And just to clarify, guys, that's not negative profits, but a decline in their profits. On top of that, they are facing some regulatory issues with a couple of their video games, complaints about them being too violent. My personal favorite, them not being able to sell in-game items in PUBG Mobile because the game is developed by a South Korean company. No chicken dinners for Tencent. So what are my thoughts on this? Well, as for their profitability, clearly, not an optimal quarter for the company. But with a company this large, I mean, it's bound to happen sooner or later. We can think back to a great example. I mean, we look at the company Apple, which went through a very similar process where when the numbers weren't ideal, you had investors saying things like, oh, the growth with this company's over, right? The company's dying out. And I know it sounds silly to say in hindsight, but those are the types of things that they say. And that's very typical for investors to be thinking very short-sighted like that, and to really be getting caught up in these quarterly earnings. So sometimes as a long-term investor, you kind of just have to try your best to cut that out and just understand that this is still a very powerful company. In fact, I put this company on the same tier as a company like Google, right? That's kind of how I would categorize a company like Tencent. I mean, despite, profits being down like 2%, guys, in this quarter they still pulled in $2.5 billion, and this was a rough quarter for them with their video game incident. I mean, not being able to monetize one of your main games, that's of course a bummer for the company, but will it affect the longevity of this company? I don't personally think so. And although we may see the tension between China and the US continue, as a long-term investor, I mean, I'm willing to wait that out. And with the stock trading, down this much, again, losing essentially a quarter of its value, I think we should at least be looking to chip away at a position on this very powerful company. So Tencent is my third stock to buy for this video, guys. I do want to just point out that the stock does trade over the counter. So that's definitely something that you'll want to clarify with your broker, what the best way to purchase that is, if it's even eligible to purchase it. But that's something that you guys are going to have to inquire for yourselves. So guys, those are my 3 stock picks for the video. Let me know what your guys' thoughts are on my stock picks for the month. Do you own any of these stocks? If you guys enjoyed the video, feel free to give it a like. It really does support the channel. And if you're not already subscribed, I post a video every Monday, so subscribe and make sure you hit that bell. So as always, thank you guys all for watching, and I will see you in the next video.